U.S. Finance Update, December 2025. Intro. Hello and welcome to your U.S. Finance Update. Today we're breaking down the latest economic and market developments in the United States, from stocks and interest rates to consumer confidence and housing. U.S. stock market and investor sentiment. Let's start with the U.S. stock market. After a turbulent year of tariffs and volatility, major indexes have remained surprisingly resilient. Throughout 2025, markets swung rapidly on policy shifts and economic data, but stocks broadly ended the year strong. Investors have piled more cash into equities than ever before, a development that some analysts see as a potential red flag for valuations heading into 2026. Yahoo Finance. Interest rates and Fed policy. Interest rates are a key driver of financial markets. In December 2025, the Federal Reserve cut the federal funds rate again in an effort to support economic activity, bringing borrowing costs down from earlier years. Federal Reserve lower rates typically make loans cheaper for consumers and businesses and can support stock prices. However, they also reflect concerns about slowing growth and inflation staying above target levels. Markets are watching closely to see whether this signals a long period of easier money or if the Fed will hold rates steady in 2026. Consumer confidence and economic perception. Despite some positive macro data, consumer sentiment is weak. Confidence recently hit its lowest point since early 2025 as Americans face rising prices and economic uncertainty. AP News. This drop in sentiment reflects concerns over job markets, tariffs, and everyday household finances. Even though the overall economy isn't technically in a recession, many Americans feel like it is. Polling shows that almost half of Americans believe their financial security is getting worse. The Guardian. Bankruptcies and business strains. Another worrisome trend. Corporate bankruptcies have surged in 2025, reaching their highest levels in many years. New York Post. This rise has affected both major corporations and small businesses, driven by higher costs, tighter credit conditions, and economic uncertainty. In many sectors, from retail to transportation, firms are struggling to adjust to a changing financial landscape. Housing market moves. On the housing front, there's positive news. Pending home sales in the U.S. jumped to their highest levels in nearly 3 years, showing strong buyer activity. Reuters. This surge is largely due to lower mortgage rates and stronger wage growth, making home purchases more affordable for many Americans. However, experts caution that rate cuts may not continue indefinitely, so buyers and sellers should stay informed. Looking ahead to 2026. So what does this all mean for 2026? Several themes are emerging. Economic growth remains positive but fragile, with slowing momentum at year-end. The Conference Board stock markets may stay volatile, especially if valuations are high and global conditions shift. Yahoo Finance interest rate policy will be key. If the Fed pauses further cuts, borrowing costs could stabilize. Federal Reserve investors, businesses, and everyday Americans will be watching inflation data, labor markets, and consumer confidence closely as we head into the new year. Outrow. That wraps up your U.S. Finance Update for December 2025. Thanks for tuning in. Stay informed, stay invested, and we'll see you next time for more financial